All right, let's talk about Applied Digital, ticker APLD. This stock just had a monster move after its latest earnings report. I mean, it absolutely took off. So what we're going to do today is dig in and really understand the anatomy of that surge. Why did the market react so strongly? Let's get into it.
So, get this. The day after their earnings call, the stock just rocketed up over 16%. But you know, a big price move is one thing. The real story here, the thing that tells you something big is happening, is the volume. We're talking trading activity that was almost 190% higher than its average. That's not just a little blip on the radar. No, that's a major market event. Big money was paying attention.
So the big question is, what on earth did they say in that earnings report to cause that kind of explosion? You might think it was just one good number, but nope, it was way more than that. It was this powerful 1-2 punch of incredible quarterly results and, this is the really important part, a huge move that basically took a ton of risk off the table for the company's future.
Okay, first things first. Let's look at the immediate trigger. The headline numbers. For their fiscal first quarter, Applied Digital didn't just squeak by expectations, they completely blew them out of the water. This is what got everyone's attention right out of the gate.
And I mean, let's just talk about how big this beat was. The street was looking for revenue around maybe $51 million. Applied Digital came in at $64.2 million. That's a huge beat. And then you look at the bottom line. Analysts were expecting a loss of maybe 14 to 16 cents a share. They delivered a loss of just 3 cents. So you've got a massive top-line beat, a massive bottom-line beat, and you're growing revenue 84% year over year? Yeah, investors are going to notice that for sure.
But look, that 16% jump, it wasn't just about one quarter's numbers, as good as they were. The real story, the thing that gets long-term investors excited, is all about the future. And that's where we find two absolute game-changing deals that management announced. This is where the whole investment thesis really snaps into focus. Okay, first up, the big one. They expanded their deal with an AI hyperscaler called CoreWeave, and get this, they now have the entire 400 megawatt capacity of their main campus, Polaris Forge 1, completely leased out, fully booked. And the crucial number here is $11 billion. That's what that contract is worth in revenue over the next 15 years. Think about that. That is a massive, predictable, almost utility-like stream of cash that basically guarantees the foundation of the entire business. Now, you're probably thinking, okay, that's great, but how in the world are they going to pay to build all that? And that's the perfect question, because it brings us to the second huge deal they announced. They locked down a $5 billion financing deal with Macquarie. And if you don't know Macquarie, they are one of the biggest, most respected names in infrastructure finance on the planet. This isn't just some bank loan, it's a strategic partnership. It's designed to fund their whole expansion, and it takes a ton of risk off the table. I mean, having Macquarie back you like this, that is a massive vote of confidence.
So this $11 billion in revenue, it's not some pie-in-the-sky dream for 10 years from now. They laid out a super clear timeline. The first 100-megawatt building is set to go live, ready for service, by the end of this year. The rest of the campus will come online in phases through 2027. So the market can now see this clear, credible path for when that cash actually starts hitting the books. It makes it all very real.
All right, so let's pull back for a second and look at the big picture here. What Applied Digital is doing is tapping into one of the biggest trends of our generation, the AI infrastructure gold rush. See, they're not trying to build the next ChatGPT. Instead, they're building the essential stuff, the infrastructure that everyone else needs to build their AI models.
And you know, the CEO, West Cummins, he had this incredible analogy on the earnings call. He said that hyperscalers are set to spend over $350 billion on AI infrastructure in just 1 year. To put that in perspective, that's about what it costs to build the entire U.S. interstate highway system in today's dollars. Except that project took 30 years. This is happening at a scale and speed we've just never seen before. And Applied Digital is positioned right in the heart of it all.
And that, my friends, is a classic picks and shovels play, right? During a gold rush, you can try to mine for gold, or you can be the one selling the picks and shovels to all the miners. That's what Applied Digital is doing. They're selling the essential data center capacity, the tools, to all the AI giants mining for that digital gold. It's a fantastic way to play the AI boom without having to bet on which specific AI company is going to win in the end.
So, okay, the story sounds fantastic, the strategy makes sense, but the billion-dollar question is always, can management actually pull it off? Can they execute? Well, let's dive into what they said on the earnings call because their comments were really telling. They weren't just throwing out vague promises, they were getting into the nitty-gritty details.
Okay, check out these key highlights from their commentary. First, they're targeting $1 billion in net operating income. That's basically their core profit within just 5 years. Wow. They also said their active development pipeline is now at a massive 4 gigawatts. And get this, they're already in advanced talks with 2 new big-name hyperscalers for more locations. Here's a huge one. They've managed to cut their construction time in half, from 24 months down to just 12 to 14. That's incredible speed. And finally, their new data centers are designed to be super efficient, targeting an industry-leading power usage effectiveness, or PUE, of 1.18. You add it all up and it's clear, this is a team that is executing at a very, very high level.
All right, so let's put it all together. What's the final verdict here? Before we get to our official rating, it's super important to be balanced and look at both the good and the things you need to keep an eye on. The bull case versus the potential risks. So on the watch item side of the ledger, you've definitely got to watch their debt levels and the fact that some of their near-term revenue is from lower margin stuff. And let's be real, anytime a company is growing this fast, there's always a risk they could stumble on the execution. But you have to weigh that against some seriously powerful catalysts on the other side. You've got that first Polaris Forge building coming online soon, which is huge. You have the potential for them to sign up new tenants for their second campus. And of course, there's the massive tailwind of all that AI spending that's just getting started.
So when we weigh it all out, our call is an outperform rating. Here's why. You have this incredibly compelling combination of a fully sold-out flagship campus, a financing plan that's been de-risked by a world-class partner, and a super clear roadmap to generating massive amounts of cash flow. We think the market is really just starting to wake up to how big this opportunity is, and we believe Applied Digital is in a fantastic position to keep executing and beat expectations.
And that's our breakdown of Applied Digital's absolutely blockbuster quarter. Hope you found it useful. Just a quick reminder as always, this is for informational purposes only. It is not financial advice.